Welcome back, ladies and gentlemen. I hope you're having a great day, and thank you so much for taking the time to stop by to chat about the general market and go over my day trades. Now, I've been slacking a little bit on these videos. I get it, but I've just been so tired. Oh my God, I'm pretty far north, and it gets dark out at like 4:30. It's dark until like 10 a.m. It's always dark out, man. I just can't stop sleeping. And then it's so cold you got to turn the heat way up, and then you know what happens when it gets hot? I fall asleep again. Plus, I'm a huge stoner, so it's been a tough couple of days on my end, but hey, we're still here. Don't worry. Still been putting out that GameStop content and our Magic content consistently, but getting caught up here today. So, what were we looking at this afternoon? Well, the market is dog dicks, so we're playing continuation, right? So we have safe and green holdings, just making moves every single day, new highs, which we love. So we're getting in on this morning off of what? Our reversal signal. We have the 21 crossing the 50, pairing that with our key level, the 200. That's the two blues crossing with the price now breaking above and then holding, right? Let's get a zoom in here for everybody. Right? You see how we had a reversal here? And then we broke through, really broke through, and then based upon, right? That's what we like. And even here, more basing, a little bit more base, baby. So I've also had a few coffees, but so this, I've moved this around somehow. You go here. But so what we do have is a nice entry model off of something that's been, running, and we have continuation. So that's perfect, and we do get our 5-to-1 risk reward. Getting out a little early, but wasn't even expecting this play, right? So that's a nice 20% move. And when the market is bad, you just take what you can get. And then yesterday, OLMA, if you will, had some high short interest, right? There was no news here, which was crazy. No catalyst, whatever. But if you go to like Fintel or Finviz, what is it? Finviz or no? It's Fintel. I get the two mixed up. I mean, they're such similar names. They should combine the websites, honestly. So we see our short interest at 20%, which is substantial. It means a little bit, and obviously, I'm saying that this is shorts covering. I don't know why else there would be this much volume. That's crazy. An absolute buttload of volume. And then we have a nice technical entry here on the gap fill. So if we go to our 1 day, we see that this stock has a gap on the 1 day here, right? A big old void in liquidity that's not been filled. We did reject the CE or consequent encroachment not once but twice. And then, when we break the lower band, we can start to take a look at an entry model, right? So that's why we're taking entries here, right? So now we broke into the gap, and then based upon, here's entry with stop loss below VWAP. I mean, you got to put it somewhere. You could put it right below the gap if you were packing some weight, but I like to be a little bit safer down under VWAP there. And we do get the gap fill, which is all I truly expected, just a 2-to-1 risk reward, reaching for the third. But the market sometimes is a little bit irrational, and I do think that this was a lot of shorts covering, because I cannot, put my thumb on why this moved that way. Other than that, so playing it as we would just based on a technical entry model. I never like to say, "Oh, shorts are entry. I'm going to get in this play." No. They're like, that's crazy. But we just play the technical entry model, and then our risk is managed, and we can just see how it goes from there. So aside from that, the S&P 500 has been downtown Abbey the last couple days, and the craziest thing is you see them all yelling ahead of time, "Oh, AI bubble, AI bubble." When's the last time mainstream media has told you the truth about anything? Not a single goddamn time. However, this coincides with the release of the Epstein files, right? I would suspect that any company with CEO or board members involved with, these interactions, they're going to get absolutely hammered. Investors are going to drop them like a hot potato. And that's not great. And we even see some board members stepping down from some companies. Woo! we're getting out ahead of it. And we've seen also the whole royal family thing. So I think those in the know understand that the lid's probably going to come off at some point here, and they're looking to get ahead of it. So kind of giving you that narrative ahead of time, and then whether or not that plays out is going to be its own thing. So we've seen the vote was yesterday. They're being released like unanimously or whatever, which that's crazy. So I would say based upon that the market will be fine. I honestly I don't know. We could still be in trouble. But we'll have to wait and see. NVIDIA earnings are tonight, so all eyes on that going forward. Now, if you are like, oh, I got to play this because the volatility is definitely going to be here, don't play NVIDIA. Play one of its competitors. If you want, if you're doing options, maybe something like AMD or maybe even just SPY contracts as well, right? Any semi company you can really get away with, I guess, right? Do I have my semis here somewhere? They should be here somewhere. Semiconductors. Yeah, maybe SMCI could be good. I don't know if I'd want to play Intel. Broadcom, maybe. ARM is pretty decent, but I think AMD would be a good target. So why is that? Well, it's because the IV is so high on NVIDIA right now. Let's go to volatility, implied volatility. We are at 80 percentile rank. So 80% of the time, IV is lower than it is today, right? So if you're buying a contract right now, you're going to be paying a premium because of that volatility. So you can dodge that by playing a competitor, an AMD or an Intel, or just the QQQ or the S&P 500 are both going to be still highly affected by the NVIDIA move while dodging all of that implied volatility, right? Of course, if you're selling contracts, 'tis the season. Get those covered calls sold if you have them. If we go into our earnings and then go implied moves and IV crush, you'll see, just what I'm talking about here. So NVIDIA's last implied volatility going into earnings was 43.3, which we are higher now. We're at like 53 or something, right? And then the last time they released earnings, it dropped to 32. That's a 24% crush. And then after 5 days, it was still absolutely crushed. So don't expect any contracts to print because they are going to get hammered with that IV crush. And once earnings is gone, people leave. All those bets are off of the table at this point, and that's why. So keep that in mind, right? The average crush, 19%. That's going to be hard to overcome with your contracts. But, maybe you play it a little bit out of the money and you get really lucky, great. But why take that additional risk when you can dodge it, right? So let's see what AMD is really quick. Is there a search bar in this website? Yes. Maybe up top. All right. And then we'll go to volatility, implied volatility. And then what? 86? That's higher than NVIDIA. Crazy. Let's check out Intel. So maybe we're not playing AMD. And this is why you check, right? This is why you check. Let's check out Intel. Sorry. A little bit lower. Which is good, right? So maybe something to check out here. Let's check out SMCI as well. Okay, now we found the one. Now we found it. Perfect. 39 percentile rank. IV here is higher than any of the others, though. So the IV here is just so jacked up in general that the percentile is low, but the actual IV itself is quite high. Like if we back up to AMD now, and all things are relevant, right? And even we'll check out Intel as well. Where's this? See how SMCI was like 70 some percent. This is only 54, but the 70% was 39 percentile rank, but the 54 here is 62 percentile rank, right? So that's worth considering where it is in its own cycle, right? because that IV is quite high and has been quite high. So nothing I'd want to participate within there either. 86 percentile rank is so high, but only 60, right? So, a little bit lower. And if you had to pick one, I would obviously choose the lower, even though the lower is higher in its average. Best bet just to play S&P 500, in my opinion, though, because it's not only myself that's recommending this, but it's the whole industry that's doing this, right? Anyone who is looking to play the earnings, they're going into AMD, they're going into Intel, SMCI, to dodge some of that firsthand IV, and then are you still gonna see repercussions from it? Absolutely, but you can dodge the brunt arm of it. So that's kind of what we're looking at there. I honestly think that we're gonna cook tonight. I think we've had this narrative knit of the markets going down and there being an AI bubble. I don't buy it, but what it very much could be is just a cover story. Maybe the markets do go down, but they're going down because all of these powerful insiders are unloading their positions preemptively before a file's release, right? Because they don't want to get cooked. They don't want to be on the back end of any of that. So you got to put out cover story for the public, and then we'll see. So NVIDIA earnings tonight really is going to dictate, I think, the next couple weeks and maybe even months of the market. But we'll have to wait and see. Either way, don't buy calls. And if you do, if you absolutely cannot hold yourself back, maybe just play the S&P 500 or QQQ. Take some lottos. Don't go too heavy and buy some extra time as well, right? Because you don't want to buy tomorrow and hold through the day. Maybe buy 2 days and then you're still selling tomorrow, right? Just buy a little bit of extra time to fully actualize a move if it is made. All right. So really not much for you guys today in the broader market. I'm taking it slow. I did some SPY calls the other day, which are relevant off that reversal signal, because I do think that we're kind of in the low because we've been beaten down so much. But again, I've been wrong before, and the S&P 500 does look bearish, right? Like if we go to our 4-hour here, it doesn't look good, right? We have our bearish reversal signal, and we've lost a key level. So always, like I'm preaching in the bullish reversal signal, when these cross each other, we're pairing it with the key level. It's the same thing on the downside, right? So we have our reversal signal, losing our key level. This market structure shift sets up a bearish order block. And, if this can't recover from the sell side, the market's absolutely cooked. And then we're going to retest this old order block and potentially a new sell side down here. So we're going to have to wait and see on that. It does not look great on the 1 day as well. This is setting up a market structure shift, which is lower lows. Very, very bad stuff. But we do have a potential sell side that could grab us, and then some daily gaps a little bit down further. How far can we go? I don't really know. 10% to the 200, 22% to our bottom gap, right? We'll have to wait and see. So the market is primed to make a move downwards, I'll admit, right? But I don't buy it, and I wasn't buying it here either, right? They were kind of like, oh, market's crashing here, and then we cooked up, right? And then again here, oh, market's crashing here, and we cooked up. But what we have set up is a double top, right? This is a really bad double top. If we can't, get back into the swing of things quickly, it could definitely be a retracement. So we're going to have to wait and see for earnings tonight through NVIDIA. You can watch that. And I think that'll give us a little bit more of a clearer view moving forward. All right. Cheers. Thank you so much for watching. Have a magical day, and I'll see you soon in the next.